Welcome to The Alternative Investor. According to a report compiled by Impact Investing South Africa, the value of impact investing has been amplified and investors are realizing the integral role it plays as part of their investment portfolio. This was driven by the impact of COVID-19 on the South African economy. For more, we're joined by Susan de Witt, who's from the UCT GSB Bertha Centre, for an analysis of what came out of this particular report. Susan, thank you so much for your time this afternoon.
Thanks for having me on the show.
So let's go through the rationale of putting a report like this together. What is it that you were trying to measure?
I think what we were trying to establish is what the level of practice was with regards to impact measurement management across the investor spectrum in South Africa. So that ranges from foundations to VC funds to asset managers to pension funds. So what is the expectation and the actual sort of practice of these methodologies? Coupled with that, we were using it as a strategic exercise to understand the degree of harmonization that is sort of desired in the market between these investors. And the reason why we want harmonization in practice, frameworks, methodologies, is that we ultimately want to be able to compare investments, not only their financial performance, but also their non-financial performance. So that's the reason why the Impact Investing South Africa Working Group undertook this piece of research.
The one thing, that stuck out to me right at the beginning of the report is that the words, responsible investing and sustainable investing are often used interchangeably. How does that affect the size of the market when you look at the whole impact investing landscape?
I'm not sure if it affects the size. Maybe just to draw a distinction. So when we talk about sustainable or responsible investment, generally we're talking about investment where investors are taking environment, social, governance into account in order to mitigate risk. So they are ensuring that they do not emit carbon into the environment. They're ensuring that they pay workers fairly, that their board is representative in terms of gender and race. And studies have shown that if they do this, it actually protects the underlying value of the asset. And over time, you can actually achieve returns over and above a traditional market benchmark. When we talk about impact investing, we're talking about investments that are deliberately hoping to achieve social and environmental outcomes, often aligned with the Sustainable Development Goals. So that's the UN Sustainable Development Goals, which have been contextualized through our National Development Plan and other sort of subnational development agendas. So if you think about the size of those two markets, in terms of global sort of size, generally about 25% of the market is screened in terms of ESG, but a much smaller percentage, probably about 1%, is deliberately being allocated to these high impact type investments. And that's the area of the market that we're most interested in. So the investments that are investing in affordable housing, renewable energy, education, last mile health, and so on.
Right. What were the key standout, features for you in, doing this research? What stood out for you?
I think across the board, investors wanted to create an environment where reporting was encouraged, if not enforced. And so they wanted to be able to see a much more kind of credible, robust data around social environmental performance than they had been seeing till now. In addition to that, everybody indicated that they would like to be able to start benchmarking their investments against their peers, and felt that this not only had a market building effect in terms of creating some sort of competitive agenda, but also that it meant that allocators of capital, your pension funds, your insurance companies, your retail investors could better understand what they were putting their money into, and so could start driving money in that direction, rather than simply allowing the market to decide on their behalf. So I think that was probably the most encouraging finding. The question is, how do you do that? There is a growing momentum globally to be able to compare data. This is being driven I'll mention a number of organizations that are driving this coalescence. The Impact Management Project has convened 16 global standard setters to align language, to position each of those organizations and their frameworks in the market so that investors can better understand what is best practice for them specifically. And those standard setters include organizations like the UNDP, who are in the process of launching a set of SDG impact standards, the IFC, who have launched the operating principles of impact management, the GRI, and the Global Reporting Initiative, who are kind of long-standing standard setters when it comes to ESG, the OECD, who we know work very closely with multinational companies and have been kind of pioneering in that respect. And so there is a drive globally around coalescence, and South African investors are engaging with those frameworks. So there's not a huge amount of appetite to develop our own local frameworks, but rather to contextualize those that are already being used by international investors. And in addition to that, feeding into those global standard setting processes. So there is an opportunity to shape what those global frameworks are through participating in working groups, technical feedback on standards, on shared metric sets, etc.
Right.
I also maybe want to mention.
No, you can continue.
I was going to mention a local initiative which has got a significant backing from our National Treasury, and that is and that's through the National Sustainable Finance Initiative, whose objectives are to really improve the reporting of sustainability throughout the financial ecosystem. One of their flagship projects is the development of a green taxonomy, and the National Business Initiative has undertaken the leadership in this regard. And essentially what they are doing is they're pulling together a classification system around green, and that's not just renewable energy. We're talking about multiple sectors, and they are establishing a set of common metrics that investors and enterprises can collect in addition to their bespoke, very kind of narrowly focused metrics. So we can start this process of being able to compare. I wanted to mention as well, in terms of green taxonomy, the contextualization that's happening around that piece is, and pull this out, is around a just transition. So we're not just driving towards renewable energy for the sake of climate. We also recognize that there's a social element to changing the energy mix, and so it's very important to measure jobs, to measure local community development, in addition to the building of large wind farms and solar, etc.
Right. On the back of this report being published, is it a type of report that you hope to re-look at the landscape again next year? What do you hope happens from this point onwards, after people read the recommendations? Mm-hmm. Mm-hmm.
So there is a report that I would encourage people to read. We didn't pull detailed information around specific practice from the impact investors that we engaged with. But there is a global impact investment network that does so on an annual basis. And their cohort of African investors has been growing over time to a point where it will become possible for them to draw statistically significant information around Africa-based investors from that research. And they're fully funded for that. I would encourage people to go and contribute to that report. With this report, what we are doing is we are raising awareness of this practice in South Africa. We partnering with training organizations so we can improve practice through evaluation community, investors, senior management. And we are pointing people to the global emerging best practice.
Yeah. Susan, on that note, we'll have to leave it there. Thank you so much for your time this afternoon. That's Susan de Witt from the UCT GSB Bertha Centre. That's it from me. I'll be back tomorrow with Books on Point. But for now, my colleague Nzinga Kunta will be back at the top of the hour with more of your news. Goodbye.